Good afternoon, you guys, or good morning, or good evening, wherever you're tuning in from in the world. Anthony, Direwolf, Alex, Matt, Sagi, he and Ho, great to see you all. Please, if you're here, let me know where you're tuning in from. Hopefully everybody's doing good. Introduce yourself in chat. Let me know where you're tuning in from. I always like to know who I'm talking to. Thank you guys for joining us today. Got a cool webinar planned. Sagi, how are you? Hope you're well. Tuning in from Toronto, Canada. Nice. Welcome, Anthony from Toronto. Alex from Argentina. Welcome, sir. Absolutely, Anthony, man. Great to be here. Happy to have you. Sagi from Israel. Welcome. Looks like Dwayne is familiar with some of you guys. Y'all see that there are some TrendSpider reps in the audience as well. These guys are going to be assisting me throughout the presentation. I got a bunch of free stuff to give y'all during this presentation. So the guys are going to help out with chat. We're going to give it like 1 or 2 more minutes to let anybody else who might be coming join up, and then we'll get started. I got a pretty big presentation for you guys. This will also be recorded and sent to you via email by Zoom. They'll be sending you a recording of it. We'll have it up on our YouTube page as well. If you happen to miss any of the links that the team shares throughout the presentation, we'll get those in the description of the video on YouTube. So you should be good there. Again, thank you everybody for tuning in. Welcome. I reckon we should get started here. All right, so you guys, let's get going. Today, we're talking about navigating market uncertainty. And I've got a bunch of free tools that I built specifically for this presentation. I'm really excited to share them with you. If you're already a TrendSpider trader or thinking about becoming one during our Labor Day sale, you're going to be able to take these tools home and begin utilizing them immediately in your daily analysis. So we're not just here to learn, right? You're going to get some free stuff. We're going to hook you up. We got to hook you up for taking the time out of your day to be here. Now, before we get into the tools, I think that we should talk a bit about what market uncertainty actually is. Ask 10 different people how they would define an uncertain market, and I think you're going to get quite a few different answers. Now, the first and perhaps most obvious is the corrective move that we saw in mid-July, this guy. I want to start here because I think that it's most common to relate times of uncertainty in the markets to periods when they're moving sharply lower. You had the yen carry trade, the reignition of recession fears, inflation, VIX hit 60. The market was spooked, right? And uncertainty was at the core of that move. Even if you weren't concerned about the news, the rate at which the market moved lower, the Qs were down 16% in 18 sessions. That's almost 1% a day. That's enough to make even the most bullish person feel some uncertainty. Now, others would say that perhaps a range-bound market or a sideways market is more an example of an uncertain market. And IWM is a really great example. For the past 2 years, really, you saw a huge chop, huge range between May of 2022 and November of 2023. Every time it went for a new high, it failed, dropped back to the bottom of the range, held lows. Then finally, it makes a new high at the beginning of this year, but it stays in an even tighter range. So more chop, more uncertainty. When it does finally break out on that rate news, they give back the entire breakout just to bounce it all back again. Like this, to me, it's dizzying how uncertain the small caps have felt over the past 2 years. And it's all been based around the uncertainty of rate cuts, when they're coming, how much they'll be, the rate that they'll cut. We all know that names within the IWM are most sensitive to rate cuts. Therefore, they're most affected by the shifts in belief around the future of rate cuts. Now, someone who's maybe more typically bearish leaning, a perma bear, if you will, might even see the recent V-shaped recovery as an example of an uncertain market, maybe calling into question its legitimacy, pointing to the generally lower amount of volume that has occurred on this move. We've all heard that term price climbing a wall of worry. Well, that's uncertainty in an uptrend. So, with these three examples, what I'm hoping to do is give you guys a kind of, well-rounded view of how market uncertainty can exist despite what the price is doing. While times when price is moving sharply lower might feel the most uncertain, uncertainty can also be present when price is moving sideways or higher. So, the reason why I built the tools that I'm going to share with you guys today is because of this deeper question of, does the market create uncertainty, or does uncertainty create the market? The way that I think of it, if markets are driven by the collective actions of all participants, and those actions are based on a certain set of knowledge and or beliefs, it's easy to argue that market uncertainty is just as much a personal internal feeling as it is an actual state of the markets. So the tools that I'm going to share with y'all today are specifically designed to help remove uncertainties that you might have. We as traders and investors cannot control what the markets are doing, but we can control how we understand what they're doing. And the tools I'm going to share with y'all should help you see things quite a bit more clearly. So there's a reason why up to this point I've focused on indexes. And it's because I want to highlight a potential flaw in the system of simply using indexes as your gauge of how a market is doing at any given time. Obviously, indexes are built off of individual constituents and they're weighted. And that weighting can give us a skewed view of what's going on underneath the surface, AKA what's going on amongst the individual names contained within it. If we know what these individual names are doing, we can gain a more comprehensive picture of index strength or weakness, which can help us to alleviate uncertainty or at least see through uncertainty. So, this brings me to the first concept that I want to spend some time digging into today that I believe will absolutely help you navigate any uncertainties that you might have. And it's the idea of market breadth. So, we're going to be looking at both the market breadth indicator and market breadth symbols. And I've got a few tools that utilize market breadth that I believe are going to provide quite a great deal of value for you. So let's go ahead and start on the market breadth indicator. I'm going to turn it on here. I'm going to switch to the daily. Do have to be in the daily to see these market breadth indicators. Now, sorry. To access the market breadth indicator, of course, you're just going to be searching market breadth in your indicator search bar up here. Just come in, search market breadth, and it will be there for you. When it loads onto your chart, inside the indicator, you're going to have two key things that you can adjust. You've got the list and the series. Now, the list defines the groups of names that you're looking at the breadth of, and then the series defines the way that the breadth is being defined or measured. For the list selection, there are lots of options to choose from across indexes, sectors, industries, and more. When choosing your breadth list, it makes a lot of sense to utilize one that relates to the asset that you're analyzing on your chart. So I've got the SPY on my chart here. I want to be utilizing perhaps the S&P 500 market breadth indicator, or maybe if I want an even deeper view, the NYSE composite list. There's about 2,000 names here, whereas just the 500 here. If you're looking at the Qs, you probably want to be looking at the NASDAQ 100 breadth or the NMS composite breadth. If you're looking at the IWM, you want to be looking at Russell 2000. On the series side, there are quite a few options here too. So you can define things like AD ratio, percentage of names above their 50 or 200-day SMAs, percentage of names making new 14, 21, 63-day highs and lows, or the relationship between 52-week highs and lows, how many more names are making highs, new 52-week highs than new 52-week lows, or vice versa. One of the most common use cases for analyzing breadth are these time-based highs and lows. So 14-day, 21-day, 63-day highs and lows. And I want to focus here because they help us visualize the amount of participation during a downward move, as well as provides us with a way to identify when that move might be getting done. And there's some really key examples that I want to share. In the case of all three major indexes, here's the SPY right here. Spikes above 25% of constituents making new 63-day lows, that's quarterly lows, seems to be a really key inflection point over the last year and a half. Every time, uh, 63-day lows, or the amount of names, the percentage of names making new 63-day lows has spiked above 25%. It's marked key inflection points on the SPY index. We see it on the QQQ as well. These big spikes are coming in at or near major lows in the index. It's interesting because we just got this reading hit a couple weeks ago. On the IWM, same exact look. Spikes above 25% of names making new 63-day lows, leading to big lows in the index ETF. Another really cool example, looking at just a different market breadth reading, is the semiconductors. So at the top here, we've got the semiconductor ETF, and at the bottom, we have percentage of names above their 50-day SMA within the semiconductor space. And what we find is that when less than 10% of names in semiconductors are above their 50-day SMA, it's a key inflection point in the SOXX ETF. It's marked major lows for the past year and a half. Every single time, less than 10% of names are above their 50-day SMAs. So these types of overdone market breadth readings can be very important in identifying key inflection points. And what TrendSpider offers you are ways to really monitor them properly. Now, the best way for us to do that monitoring is actually not with the indicator itself. And the reason being is simply that these conditions, they just don't occur all the time. They don't happen super often. So it doesn't make sense for us to be taking up valuable real estate on our charts with this indicator. Instead, we can use market breadth symbols. Symbols allow us to turn the indicator into an asset that we can actually chart. This opens up the ability to utilize technical analysis elements and TrendSpider functionality on breadth conditions. So the first tool that I have to share with you guys today is actually a pre-built watch list of all of my favorite market breadth symbols. If you're a TrendSpider trader, my guys in chat are going to post a link to this watch list, and you can go ahead and import this watch list into your account. In fact, you're going to want to utilize this, or you're going to want to import this because you're going to need it for the next tool that I'm going to give you here in a few minutes. Now, this list, I have to be clear, it does not include every breadth symbol that's available on the platform. The guys are also going to share a blog post that explains how to build your own breadth symbols. You can create hundreds and hundreds of breadth symbols utilizing all those different readings and so many different different lists, be it indexes, sectors, industries, and so on. So again, going back to that 25% reading, we know that 25% of names hitting new 63-day lows is a key inflection point for the SPY, the QQQ, the IWM. We want to utilize the market breadth symbols to create alerts on that level, right? We want to know next time that level is hit, and we want the platform to monitor it for us. So in order to do that, all we have to do is put a horizontal line at the spot, at that 25% spot. Up on my chart right now, I've got the 63-day lows list for the S&P 500 here. So it's that same market breadth. It's exactly this that we're seeing on our first chart, except now we can create alerts on it because it's a symbol. So I just right click on the line, create the alerted line, choose my triggers, choose my expiration. How long do I want this to live in my system? How many times do I want to be triggered on it? Set it and forget it. That alert is living on this chart. The next time more than 25% of names in the S&P 500 are hitting 63-day lows, TrendSpider is going to let me know. I could pop through the other lists. I've already done it. This is the 63-day low list for the NASDAQ 100. I've got an alert on it. For the Russell 2000, I've got an alert on it, right? TrendSpider is my eyes and ears on that key 25% level. Additionally, though, aside from just identifying a key level to monitor, we also can do technical analysis on these market breadth symbols as well, like I said. So in order to give you guys a good example of that, I'm pulling up a multi-symbol view workspace here, and I've got two charts here. I've got the IWM at the top, just the daily price chart of the IWM. And then I've got a Russell 2000. This is a 14-day low breadth symbol down here. And remember, because it's a symbol and not an indicator, I can do technical analysis on it. I can put indicators on it. And so what I've done is I've added a 50-day SMA here. And the reason why I've added the 50-day SMA is because the 50-day shows us a key inflection point for the IWM. What we find is that whenever the 14-day lows list on the Russell 2000 breadth chart breaks below its 50-day SMA, it's a key risk on level for the IWM. It marks lows and the IWM is able to move quite higher. As long as the 14-day lows or the percentage of names making new 14-day lows stays below its 50 SMA, then price is able to kind of move higher. Notice also that when the line is trending down, it's an even stronger move up too. We see this time and time again over the past year and a half. When the 14-day lows list or percentage of names making new 14-day lows breaks back above its 50-period SMA, it's risk off. Price hits a high, price sells off, price goes sideways. But every single time over the past year and a half or so, that this 14-day lows list has stayed below its 50-period SMA, these have been key areas where we could get long the IWM. See it time and time again. So again, this visual understanding leads us to wanting to utilize alerts, right? I don't want to have these charts up all the time. I don't want to have to be monitoring them. I just want to know when breadth gets above or below that key moving average. And TrendSpider functionality, again, makes it very easy. Just as I did with that horizontal line, I can simply right click on the moving average here and create an alert on it. I'm going to choose a breakthrough alert again. I'm going to max out my expiration. I want to be alerted for a long time on this. I want to be alerted as many times as it happens. And so now, again, platform, my eyes and ears on that key change in those 14-day lows, right? If I'm long the IWM right now, I'm going to use these alerts as my signal to perhaps get out of my long position or perhaps get into new long positions, right? Or perhaps start a short position. You can extend the use of market breadth symbols into other tools on TrendSpider as well. They're not just on chart features. I can bring the watch list that I shared with you guys over into the market scanner and use it as a scan through list. So let me show you quickly how to do that. I'm going to pop over to the market scanner. In my scan through drop down menu, I'm just going to search market breadth here. And so now I am essentially whatever I scan for here, I'm scanning just for those conditions occurring on all of my key market breadth symbols. So what do we want to scan for? Well, let's go back to this idea of a market breadth symbol breaking above or below its 50-day SMA. Maybe I want to be alerted, or maybe I want to look for any market breadth symbols that are actually breaking above or have recently broken above their 50-day SMAs. So this is the next tool that I'm going to share with you guys, or my guys in chat are going to share with you guys. I've created this scan, recent 50 SMA cross. And again, like I said, you're going to need to utilize you're going to need to import the market breadth symbols watch list into your account in order to utilize this scanner properly. But the guys have just shared it with you. And essentially what this scanner looks for is instances where any of these market breadth symbols have recently broken above their 50-day SMA. I can see, let me put the 50-day on the chart here. I can see that the 21-day highs in the S&P 500 recently broke above its 50-day SMA. 14-day highs as well in the S&P 500 recently broke above its 50-day. Oh, it's having a hard time loading. The 200-day, or rather names in the Russell 2000 above their 200-day SMA recently broke above its 50-day SMA. Names in the energy sector that are above their 50-day SMA just broke above its 50-day SMA. I know that sounds like maybe a little bit of a tongue twister, but you know what we're doing here is we're utilizing market breadth to find potential inflection points, and you know maybe we want to the next step here. You know, once we've found the market breadth symbols that are meeting that criteria, then it makes sense to compare that market breadth symbol to the index ETF that it's kind of uh, correlated with. So we'll use this 50-day EMA, or rather 50-day moving average energy market breadth symbol, and we'll compare it to XLE, right? That makes sense. So at the top here, I've got the XLE daily chart, and at the bottom, I've got energy names above their 50-day SMA. We know that it's just broke above its 50-day SMA. And when we make the comparison of these charts, we actually see something really interesting here. We see that when the market breadth symbol is able to gain its 50-day SMA and hold it, what ends up happening is a big, powerful move higher in the XLE. Right? We marked the relative low of this consolidation phase back in July or so of 2023, and we got a 22, nearly 22% move higher once it held that 50-day SMA. Then again in February 2024, we break above that 50-day SMA on the market breadth symbol, and it results in an 18% move higher on the index or on the ETF. Well, we're seeing the same thing now. You're seeing price breaking above and trying to hold that 50-period SMA. If this thing's able to hold, well, history suggests that a potential big move might be in store, and price action kind of is looking like it as well. So, you know, the idea here, you utilize this scan to find the setup, and then you go back and you kind of compare the setup to what's happening on the price action chart of the index or of the ETF that it represents. Just giving you a good understanding of kind of how market breadth can be your early detector of potential moves. And remember, regardless of the indicators that you use in your analysis, you can apply them here in this scan. You don't necessarily have to utilize this 50-day SMA gain or this, breaking above the 50 SMA. Try MACD crosses, try overbought, oversold RSI readings, like explore it, play around with it, and just use your market breadth symbols as your scan through list. Now, if you want to get really fancy with market breadth, you can try adding it to your favorite strategies. So I'm going to pop over here to one of my personal favorite strategies. This is the Netflix and chats strategy. I'm not going to get into the details of like what this strategy is. We've shared it before. If you follow us on social, you might have seen it in the past. The reason why I personally really like this strategy is because it's pretty simple. Like the criteria to get you in and out is pretty simple, and it just really kicks ass. Like it really maximizes performance. The strategy yields 140% return versus the asset yielding 30.8% over the same period of time. So you're essentially like a 400% higher return on the strategy than on the asset. Well, the idea then is to bring market breadth into this strategy to see if we can kind of juice up those returns a bit. And in fact, we can. And I'm going to show you a new breadth chart to kind of explain my thought process here. So what this breadth chart is, this is the NASDAQ 100 63-day highs list. And we see pretty clearly on this chart that the 63-day highs in NASDAQ likes to peak out somewhere around 20 to 25% of names. This means that at any given time, if 25% of names in the NASDAQ 100 are hitting new 63-day highs, then key names within the index might be getting overbought. With that in mind, we can go back to our Netflix and chat strategy and include a condition on the entry side that essentially states that the new 63-day highs list has to be below 25% in order to enter into position. The idea is to kind of help us avoid scenarios where we're getting into long positions, just as things within the index are potentially starting to get a little bit overheated. If we look at the performance chart in our strategy, we actually see some instances where this idea might help us, specifically where we're getting into trades at highs. And those trades are instantly going against us. We do it here. We do it here. There's a really big one right here that would be great to be able to mitigate. There's a couple over here as well. Anywhere on this chart that's red, that's where we get into a position and it ends up going against us. So it's notable that we've gotten into quite a few positions on this name that have gone against us at highs. So maybe we can utilize this idea of the of 25% of names in the making new 63-day highs in the NASDAQ 100 as a filtering mechanic for this strategy. So what I'm going to do, I'm going to go back to the strategy here. I'm going to add a condition group and stick with me here. I'll explain how this works. I'm going to say price close less than a constant value of 0.25. That's our 25% value. And then on current symbol, I'm going to change this to on other symbol. And I'm going to make this H63 and 100. So what this is defining, it's saying that in order to get into this trade, the percentage of names in the NASDAQ 100 making new 63-day highs has to be below 25 because, as we saw in this chart, that's where it tends to peak out. When we rerun the strategy with that one simple condition included, remember we were at 140% profit on this particular strategy. Now we're at 157%. So we've just gained almost 18% on this strategy that was already doing really well, already crushing buy and hold. Now it crushes buy and hold even more by an additional 18%. Now it doesn't mitigate every single trade at the highs. That big main one that we identified here, it does mitigate that one. The next step that we want to do here is, with all of your strategies, whenever you're building strategies, you want to kind of like adjust things, play around with the numbers. What happens if we don't get into a trade if more than 24% of names are at 63-day highs? How does that affect the performance of the strategy? Well, we find out that actually it doesn't affect it at all. That doesn't really help us. What if we switch it to 26%? Once you've found something that works, we encourage you to kind of push a little bit on the fringes and see, does it help if I change the value a little bit higher or a little bit lower when we define less or when we define 63-day highs, the percentage of names at 63-day highs below 26%, then that brings our performance up to 161. So we went from 140 to 161, an additional 21% just by defining a very simple market breadth condition. If you want to explore this strategy, my colleagues are going to post a link to it so that you can import it into your account and play around with it. Maybe this will inspire you to find some cool ways to implement market breadth into your own personal strategies as well. This is just one idea. Really go out and explore this stuff. So with the market breadth symbols watch list, the 50 SMA cross-up scan, and this super profitable strategy on Netflix, now you've got quite a few different market breadth-based tools that you can import into your accounts, and you can begin implementing these things into your daily processes. You can use that scan to find other setups. You can test this strategy out on your favorite names. You just never really know what kind of alpha you're going to find. And if you've been hesitant to become a TrendSpider trader because you didn't really know where to start with the platform, now you have some solid tools to rely on, and I'm about to give you a bunch more. So let's circle back to that big idea of this presentation, which is navigating market uncertainty. Now that the all-important NVIDIA earnings are behind us, we have a new major event on the horizon that's absolutely going to be affecting the markets for the next few months, the election. Right? All elections are important, this one particularly so. Neither candidate seems to be quite a shoo-in just yet. Seems to be a pretty close race. And until someone really breaks away as the apparent leader, the market really could struggle because markets hate uncertainty, right? Once there's a relative certainty around who's going to get in, markets can begin to price in their policies, that sort of stuff. But without that uncertainty, markets are likely to stay volatile. In fact, TrendSpider offers historical data that shows us just how poorly markets tend to perform in the coming months, specifically September and October of election years. And using our seasonality tool, we can visualize it. Now, for people in the audience who are not yet familiar with seasonality, this is what it looks like. Seasonality shows us performance by month of the year, by week of the year, by day of the week, by hour of the day. I'm going to stay on the monthly here. Um, Most of you have probably seen this, but I want to show you something that you might not be aware of with seasonality. If you click down here where it says exclude periods, you can remove periods from the calculation. So if we want to know what a name performs or how a name performs specifically in election years, we have to remove all non-election years. So let me do that really quickly. It's kind of hard to do this and talk at the same time, but I'm going to try. Notice how when I'm adding years to this, the calculations change, right? The bars are changing because we're removing all other years and we're just seeing election years now. So let me do 2006, 2005, 2003, 2002, 2001. Okay, so now we're looking back since 2000, 25 years, essentially 25 years worth of data. And look how drastic the results change when you remove all non-election years. I'm going to go back to there. This is all years over the past 25 years, monthly performance on the SPY over the past 25 years. And this is with election years only. This is with all of the years removed. August, great month. This is exactly what we saw this month. You know, despite that big drawdown, we have retraced the whole thing and we have performed very well and we've done it, right? Like August is meant to be a great month in election years. That's exactly what we got. That performance dramatically drops down in September. See 33% win rate with a negative 3% mean change. Gets even worse in October, 17% win rate with a negative 3.5% change, right? So that's telling us that just on average, we can expect price to retrace somewhere in the neighborhood of 6.5%, just based off of the last 25 years worth of election data. It's like 6 elections. If we look at the Qs, we see the exact same thing, right? September gets really bad, or September gets worse, right? 50% win rate, mean change almost negative 5%. October, really bad. 17% win rate, mean change, negative 4.7%. IWM kind of fares loosely the best of the three, mean change of negative 1.24 next month with a 50% win rate, mean change of negative 4.65% in October. October could suck, right? So with that in mind, I want to hook you guys up with yet another set of tools that you can utilize to mitigate this. Much like Market Breath, the tools that I'm about to share with you are designed to help you look past index performance and analyze individual names themselves. Specifically, they're going to help you understand the true performance of each name relative to its peers so that you can kind of make more informed decisions about the names that you're trading throughout this period that might be more difficult. If you were in attendance for our webinar last month, I gave you guys some homework, and that was to explore the relative performance tool. Hopefully you did that. If you did, big kudos to you. I'm proud of you. If you didn't, no worries. We're going to explore it right now. So first, let's dig into the nuts and bolts of how relative performance works. I'm going to switch to just a single name here. And so now we see relative performance at the bottom of our chart. The relative performance indicator features a line that oscillates between 0 and 100. The numerical value of this line represents the percentage of names that your chosen asset, in this particular case, it's Apple, the percentage of names that Apple is outperforming, or whatever asset you have up on your chart. So I can see that the current value here in relative performance is 78.9. That tells me Apple is outperforming 78.9% of the names that it's being compared to. Now, this value is being derived in two ways, via a benchmark and via a performance type. Your benchmark is going to define the index or group that your chosen asset is being compared to. In this particular case, and the default setting is the S&P 500, but you can compare it to the Russell 2000. When we do that, we see Apple is outperforming just 68.5% of names in the Russell 2000. That's kind of interesting. You can compare it to names within its same sector, names with the same market cap, or names within the same sector with the same market cap. So Apple is outperforming 57.1% of mega cap technology names. Maybe that's what you would expect. Maybe it's not. I'm not sure, but it is interesting. Switch this back to SPY because I want to stay on the S&P 500. That's the benchmark. You've got the type setting is the performance type, and it defines the type of performance that's being evaluated to make the comparison. The yearly selection is the default. It considers the change in price over a rolling 4-quarter period, with the nearest quarter being a little bit more heavily weighted. The quarterly section, it measures the change in price over a rolling 3-month period. And then tech rank foregoes price change altogether. It focuses on a set of momentum and trend indicator readings. I'm going to stay on the yearly setting. If you want to know more about the other two, the guys in chat are going to link you to a blog post that explains all of the settings kind of in more detail so that you can read about it and learn about it, because some of those other settings might make even more sense for you than just the standard settings. However, like I said, I'm going to stay on the standard settings. The power of relative performance really lies in its simplicity, and the direction of that relative performance line is the key, right? if the relative performance line is trending upwards, like we saw from kind of the beginning of May through to the beginning of July, then the asset that you're looking at is really outperforming the benchmark. Apple was outperforming the S&P 500 from essentially early May into early July. If it's trending downwards, then it's underperforming the benchmark. If it's trading sideways, like it kind of is now, it's performing the same as or kind of in tandem with the benchmark. It's not outperforming, it's not underperforming, it's just kind of doing the same thing as the benchmark. Now, since relative performance line and number are both representations of relative price performance over a rolling 4-quarter period, names that are up the most over the past year, NVIDIA, they are going to have the highest relative performance readings, right? And also, they're going to pin to the top of the range based on how long they've been outperforming. There's a very clear example of NVIDIA outperformance. It's outperformed 99.8% of the names in the S&P 500, and it's really kind of been doing that since March of last year. Wildly impressive. On the opposite side of the coin, you've got a name like Intel, INTC. It's currently outperforming just 0.2% of the names in the S&P 500. It's been relatively pinned to the bottom of the range. So the strongest names get pinned to the top, the weakest names get pinned to the bottom. This might lead you to believe that perhaps you should be looking for names with really high or really low relative performance values, with the idea of being long the outperformers or short the underperformers. It's certainly possible. You can do it. You can pop into your scanner, grab the relative performance option. We'll just say greater than a constant value of 98. We'll search the S&P 500 list. And we're going to get back every single name that currently has a relative performance value above 98. These guys are monsters right now. They are outperforming 98% of the S&P 500. The problem with this approach is that it's just simply not that alpha rich. It shows us the leaders right now, but not the names that could lead in the future, or not the names that are seeing a big change right now in leadership, or potentially seeing weakness come into the picture, right? For the alpha, we really have to think a few layers deeper. So let's go back to where we started this conversation, navigating uncertainty despite market conditions. And let's talk about using relative performance specifically when we're in a strong uptrend. We all know broad-based participation creates strong markets, but how do we determine which names are the best of the best during times when many names are performing well? Well, one way to do that is to identify whether relative performance is confirming price. And we do this by looking for convergence or divergence between the price of an asset and its relative performance value. In essence, if prices are making new highs, then relative performance should be too. If prices are making new highs and relative performance is not, that's divergence, right? It's an early warning sign that perhaps a name is weakening relative to its benchmark, relative to the market. So I want to go through just a couple examples here. First off, a divergence example, and Amazon is a very clear one. As price pushed into new highs between kind of beginning of April and middle July here, we saw that relative performance was actually weakening during that same period of time. It didn't weaken by much, but it was weakening. When this index sold off a few weeks ago, this was potentially a foreshadowing that perhaps that was going to happen. You know, although this doesn't necessarily tell us that the yen carry trade is going to come into the equation. What this kind of suggests is that perhaps smart money who were aware of that trade coming into the equation were starting to kind of lighten up their positions in this name. The relative performance was weakening as the price was increasing. So clear divergence. A great example of convergence, price strengthening as relative performance strengthens, is Altria, MO here. Every single time this thing has made a new kind of important high since March of this year, relative performance has made a new high as well. So you've got that convergence. You've got relative performance strengthening as price is strengthening as well. When the market sold off couple weeks ago, Altria was like completely unfazed, right? And you could argue that the fact that it was unfazed, that was almost foreshadowed in its convergence that it saw before that move actually happened. So notice what we just did there, right? We identified rotation utilizing relative performance. You've got a mega cap tech stock weakening as a more stable defensive stock is showing strength. Just by visualizing this, you're able to see that push and pull of where money is flowing in the markets. So this brings me to the first relative performance tool that I'm going to share with y'all. If you're looking for names that are setting up or performing similarly to what we see here in Altria, I've actually built a scanner that locates these types of setups. The one difference about the scanner that I built, it looks for these setups that are a little bit earlier in their development. We don't know how long this trend could last on Mo. It certainly could continue, but it has been going for 6 months. We might want to find names that are just starting to exhibit signs of this. And so I've developed some scanners to do that. The first one, let me grab it real quick. Oops. The first one is called RP 30-day high. And the reason why this scanner is the way it is, when relative performance is making new 30-day highs, it's just a very well-known benchmark. So I wanted to make sure that we defined that piece. There's a lot going on here. The guys are going to share it. Yeah. So thank you for sharing that, fellas. There's a lot going on in this scan visually. I want to make sure to talk through the pieces so that you understand it. I think it's really, really important that if you're going to utilize these tools, don't just utilize them blindly. Understand what they're saying. So all these conditions, they're simply defining that relative performance right now is higher than it's been over the past 30 days, period. That's all it is. Relative performance is at a new 30-day high. This condition right here defines that price is closing at a new 30-day high or has closed at a new 30-day high within the past 3 days. I give it a little bit of wiggle room. These conditions here are just additional filtering mechanics. This is where you can kind of adjust and play around with this scanner. Once you import it into your account, you can make this scanner your own. I have filtered by price. So I'm saying any stock that comes up in the scan has to be above $5, has to be above $1 billion market cap, has to trade at least 500,000 shares per day on average. And then I've defined that relative performance currently is above 20. So essentially, not only do I want to see a new 30-day high in relative performance, I don't want to kind of bottom feed. I'm not interested in those names below in the red, kind of like we saw with Intel. I'm not interested in those. I want to find names that are kind of coming up, that are on the up and up. And essentially what this scan finds is exactly that. We're finding these sharp moves higher in relative performance, and those sharp moves higher being confirmed by price. So if you're looking for names that are kind of like MO, this is the scan that you're going to use to find that. Now, it doesn't make sense for me to share this scan without giving you the alternative of this scan, right? The alternative would be new 30-day lows with price making new 30-day lows. So I've got that scan pre-built for you as well, and the guys are going to share it so that you have it. It is literally the exact same scan, just the opposite. So relative performance today is lower than it's been over the past 30 days. Price is making a new range low, new 30-day range low. And the only other change here is that relative performance is less than 80. I don't want to be considering shorts on names that are outperforming 80% or more of their benchmark, right? They're too strong. I don't want to be shorting them. I want to short them into weakness. So I specifically define that any name that comes up in this scan has to be below the relative or below an 80 relative performance score. And while we don't get many names that populate in this particular scan right now, we know what's coming, or we know what seasonality says is coming. And so this scan might prove to be a little bit more fruitful in the coming weeks. Markets have been really strong, frankly. So Keep this in your back pocket. You might be able to utilize it here once if the markets do weaken. But there, so now you've got two great scans to find that relative performance convergence. Whether you're interested in taking long bias trades or you're interested in taking short bias trades, you have an option for either side. So the last tool that I want to share with you guys today is something that we actually built during the correction a couple weeks ago. The idea behind this tool or this scanner was really simple. In times of great market uncertainty, like what we experienced kind of in the first couple weeks of July, only the strongest names survive. And when I say the strongest names, I mean names that are strong technically, fundamentally, and that are meeting key relative performance values. If seasonality is about to weaken, as history suggests, things could get dicey, and you're going to need a tool to help you navigate. They say there's always a bull market somewhere. The scan I'm about to show you guys can help you find it no matter how bad the conditions might be. So we call this scan the correction deniers scan. It's a pretty apt title, right? So let me grab it really quick and load it up. And again, I wanna spend some time walking through what we're seeing here because there's kind of a lot going on, and I think it's really important that you understand what it's actually looking for. Remember, the key piece of RP or relative performance. Remember what we said at the beginning. If that relative performance line is increasing, then a name is outperforming relative to the index. So defining the uptrend in relative performance is one of the key components of the correction denier scan. All five condition groups that we see here, that's what these five condition groups do. We're defining the rate at which relative performance has increased over the last 30 days. So in this first group, we're saying that if relative performance is currently less than or equal to 40 right now, then it needs to have gained at least 50% over the last 30 days. So a big boost in relative performance over the last 30 days. In the next group, if relative performance is between 40 and 50 right now, then it needs to have gained at least 40% over the last 30 days. If relative performance is between 50 and 70, it needs to have gained 35% over the last 30 days. Notice how we're kind of utilizing this stair step approach, loosening up the 30-day percentage gain requirement as the current RP level increases. We're doing this because as relative performance increases, it becomes harder and harder for the value to gain exponentially, right? So this approach is really designed to identify relative performance leadership across a range of relative performance values. It's meant to avoid blind spots in the search, and it does it really well. But that's just the first step. We also want to define key technicals and key fundamentals. And so we do that here too. In times of real market weakness, money gets more selective, right? Where it's going, where does it go when it has nowhere to go to, right? It's going to just the strongest names across this whole kind of set of rules, fundamentals, technicals, relative performance. So on the fundamental side, we've got some bullish stuff here. We're looking for momentum being on the side of the bulls. MACD's above the signal line. We got price above a 50 SMA, kind of simulating an uptrend. And then price is within range of the 52-week high by 15%. Those are the key technicals. On the fundamental side, we've defined that year-over-year revenue growth has occurred over the past 2 quarters, that the debt ratio is below 2.5, that net income is greater than zero, so profitable companies with low debt. These two condition groups, make these your own. You know, if you have specific fundamental criteria you require, by all means, change these out and put in what makes sense for you. If you have particular technical criteria that you require, again, by all means, change these conditions, make it make sense for you. Ultimately, though, what we get on in the results of this scan, these names are the relative performance leaders that have technicals and fundamentals to back that performance, right? If we do see a pullback, or if we do see the pullback that seasonality suggests is coming, the names that are coming up in this scan during that time are the names that you want to be keeping a very close eye on because they are simply denying the correction, right? This scan finds names that are super strong in the face of broader market weakness. So put this in your back pocket. If you're expecting seasonality to deteriorate, if you're expecting the markets to struggle over the next couple months into the election, this scan could be a key piece of your process over the next couple months. So let's recap what we learned today. You guys now know how to use market breadth symbols, right, to create alerts on and scan for specific market breadth conditions using that new market breadth symbols watch list that I gave you. You also know how to filter for seasonality in election years. We just learned about that right here, this bad boy. Um, what I would recommend with this, go through your watch list. See if there's any names that happen to perform really well or really poorly during these election year times. Finally, you know how to, or you now have a set of relative performance tools that you can use to identify key movers. Whether the overall markets are really strong or really weak, you're going to be able to find setups there. You're well equipped now to handle any market uncertainty because now you got some tools to help you see through it, right? That's what this lesson is really all about, providing you guys with means to navigate any market conditions. So if you're already a TrendSpider trader, hopefully you've taken advantage of those links that the guys have been posting throughout this presentation. You can start incorporating all those tools into your analysis right now. If you're not yet a TrendSpider trader, what are you waiting for? I just gave you guys a ton of tools that you can utilize today. And we've got a huge Labor Day sale going on right now through the weekend. You can save a ton of money on the platform, up to 63% off your first year. So if you're concerned about the trajectory of the markets in the coming weeks and months, now's the time to really get serious about learning to use these tools, market breadth and relative performance. They're really going to help you navigate it, I promise you. So with that, guys, that concludes my presentation. And I want to open it up for questions. If anybody has any questions, feel free to post those in the chat. I haven't been looking at chat, so I assume that my guys have been answering those questions for you. But if anybody has any last minute things for me, let me know. I'm happy to answer. Anything? Anybody? Are we good? Kind of seems like perhaps we're good. No open questions? Going once, going twice? All right. Well, again, I really want to thank everybody for being here. Small group today, which is really nice, nice, intimate little presentation. I hope that you learned something here today. I hope that this presentation has inspired you to kind of play around with some of these tools. And again, like I said, if you're not a TrendSpider trader, you can access all of these tools simply by signing up. You can import all this stuff into your account, utilize it every single day. We're going to have a recording up on YouTube. If you decide that you want to sign up for an account over the weekend, you want to gain access to this stuff, just pop over to our YouTube page. All of the links will be available in the description of this video as soon as it's live. If you're interested in learning more about relative performance or market breadth, Ryan just posted links to 2 blog posts that we've written about both of those tools so you can learn a little bit more. Again, there's more to those tools than I went over today, right? There's more different settings that you can utilize. And so play around with them, make it make sense for your style of trading, your style of analysis. But again, just a big thank you to you guys for being here today. I really appreciate it. I hope you learned something. I hope that you find these tools helpful. If you have any questions, don't hesitate to reach out to us. Our chat is available every single day, Monday through Sunday, down here in the bottom right-hand corner of your platform view. Just click on that contact us button. These guys are always here to help out with any questions that you have. And yeah, I hope everybody has an awesome Labor Day weekend. Be safe out there. Enjoy yourselves. Hit me up if you need anything. And yeah, I'll talk to you guys very soon. Thanks again so much for being here. And we'll see y'all next time. All right. Bye-bye.